inviting me, and my apologies to keep everyone waiting. This is my, as Prince also mentioned, I could hear that this is my maiden spaces. So I just had a previous spaces, whichever ones I attended, I would usually be just a passive listener. The previous spaces, whichever ones I attended, I would usually be just a passive listener. So this is the first time I've been asked to speak. So apologies, and Prince, thanks so much, and also for the great work that you're doing. Uh, Thanks.
Thank you so much for your kind words, Santosh. Welcome to our spaces. Guys, for your information, today we have Santosh Nair ji of Money Control, the author of a very popular book that goes by the name of Bulls, Bears, and Other Beasts. Basically, he will walk us through the story of Indian stock market from the early 90s till today, how things have evolved over a period of time. And surely we will, I completed the book within 2 days. It is such an engrossing book, and you will find it as soon as you feel like completing it as soon as possible. So it is a very, very good book, and I must say it could be the first book for you so as to start understanding the market nuances. So a very warm welcome, Santosh. And any opening remarks from your end?
Well, first of all, thanks, Prince, for having me here. And yes, it's been quite a interesting journey. Watching stock markets evolve from the late 90s when I started to first report on the stock market. I began my career at Business Standard. Um, so the transition had just happened from the open outcry system to the screen-based trading system. I think it would have been about a couple of years old because NSE directly it had gone live with screen-based trading itself. BSE took some time to adapt. So that was also fairly interesting period because the market was still shallow. Uh, and foreign institutional investors were just beginning to get a feel for Indian stocks. Domestic funds were not very active at that point in time, very, very, very tiny. So, market was largely run by, I would say, dominated by a handful of foreign institutional investors and few big brokers, operators, whatever you call them. Uh, Information was hard to come by. So today you have plenty of disclosures, but back then uh, disclosures were very, very far and few. In fact, back then I still remember every day I would go from Business Standard office in Worli to BSE just to write down all the notices that they would put up on the notice board on the first floor. So you had to get information. Other than that, you had to develop sources. And back then it was a little easier because you could straight away walk up to any broker's office. He would entertain you. You could get chatting. And since I was in a newspaper, there was the luxury of being able to meet people, have these leisurely chats, then come back to office and file. Something like that is very difficult in today's digital age. So, in a way, I would say that I was very lucky to have started reporting at a time when things were not as hurried as they are right now. So, those years helped me develop contacts with a lot of people, a lot of players who went on to become quite big. Also, many fund managers who were just starting off at that point. Yes, as I said, it was very interesting market. Regulations were also just about beginning to evolve at that time. Uh, you had these bull and bear cartels slugging it out frequently. The one good part about that period, particularly, I would say the period from about 97 to till 2001, it was still a market of personalities. It's not the faceless market that it is today. You had interesting personalities. You could write about people, and I would say that at that point, people were more easily accessible, and they would speak pretty freely as well. Those things have changed today. But yes, market was pretty shallow, so it was prone to a lot of manipulation back then. Things are much better. if I look at it from a retail investor's perspective, I would say that today he's got many more sources of information, which never used to be back then. Uh, you always had to depend on your broker, newspapers, even the stock exchange websites were not very developed at that point in time. So, uh, in that sense, today it's far more level playing ground, I would say, for anybody wanting to enter market and invest in shares than back then when you didn't have access to good information. Even balance sheets, for that matter, were pretty rare, were hard to come by. I wouldn't say rare. Unlike in the early 90s, when many brokers would say that they would actually go to the Raddiwala and buy balance sheets by the kilo. So that was mainly the interesting part about covering markets in the 90s. You had those famous cartel wars, and it was very good fun to write about those. SEBI was also pretty easily accessible at that point in time. You could very easily call up senior officials there, and they would also be willing to tell you about what was going on at the regulator's end. That, I think, slowly has changed over a period of time. Uh, Also, markets have become deeper in many ways. They have changed for the better, of course. As I said, it's a level playing field. But when I look at it through the cynical eye of a journalist, uh, I find that many of the practices which were there back then, I would say some of the dubious practices, they're there even today. In a slightly different form. So the same advantages, disadvantages which were there back then, things are pretty much the same. So, for instance, today a retail investor can get access to information far more easily, but it also means that everybody has access to the same information. So you don't really have an edge out there. So 90s, who was willing to take the trouble, dig for information, data, he clearly had an edge. Today, the data is pretty much freely available, which also means that the opportunities for making those kind of big gains, they are somewhat lesser than what it is now, because back then you had a lot of stocks which were really undiscovered. Today coverage is pretty wide, so all the information is pretty much there in the public domain, and that then gets reflected in the prices as well. So yeah, broadly this is just my quick bird's eye view of the market, how it evolved. Things have become far more regulator, a little boring from a uh, journalist perspective, but once again in the last couple of years, again things are beginning to get a little more exciting, I would say. Yeah, Prince, that's
Right.
briefly what I would like to say.
Great, great. So, Santosh, like if we go back when you started your career with the business standard, so was it like you had prior exposure to share market or any liking to share market, or it was all serendipity that you completed your education and you got a job which was related to share market? Tell us more on that, please.
Yeah, very strange coincidence. Just before I got onto the spaces, one of my friends called me. Now, he was my senior in college. I graduated in chemistry. He was 2 years my senior. So he had joined Business Standard, and at that time I just finished my graduation and I was looking for an opening. And he told me that why don't you? We are looking for trainees, so why don't you uh, give an application and see how it goes? I had no prior experience of covering stock markets till then. So I would say, Prince, yeah, it was just serendipity that uh, got me into Business Standard.
Great, great. And I can relate like market, I mean the exposure to market is one thing you develop a great passion for the market all along. So how had been the era when I mean initially started in the 90s, like you, that was more of broker dominated times. So how you I mean see from the perspective of brokers and the broker industry we have today, how you see this has evolved over a period of time?
Yeah, so But as I said, beginning to get active, you had a few of them. Uh, so it was largely, I would say, broker plus some bit of foreign institutional investors also. And if they would buy a big chunk of shares, the market would just surge. If they sold, market would just go down. So it was very much dependent on what foreign institutions were doing. But even foreign institutional exposure was largely restricted to the top, I would say, 50 odd stocks, 50 or 75 stocks at best. Because in the early 90s, like just when they had begun to come, some of them, I think you had seen a big boom in many of these mid cap, small cap stock. There was a big flurry of activity in the IPO market at that time. Then that rally went bust. And after that, I think foreign institutionals were a little more worried about the kind of stocks that they would buy. They usually went for those stocks which were liquid. And those happened to be stocks within the Nifty and Sensex universe largely. And in back in those days, BSE and NSE, both of them had a 7 day settlement period. So you would see a lot of action happening on Tuesday. The NSE had a Wednesday to Tuesday cycle. So you would see a lot of activity happening on Tuesday when it was time to square off on the NSE. Similarly, you would see a lot of action happening on the BSE on Friday when it was the last day of settlement there. So quite a few brokers who would do deals for foreign funds, because at that time in the 90s, many foreign brokerages had set up shop here. But after the Asian crisis, many of them closed operations. So quite a few foreign funds used to trade through domestic brokers. So some of them had become fairly powerful at that point in time, because they were doing work for some of these big foreign funds. And even where there were foreign brokerages operating, they would farm out some bit of their orders to the local broking houses. So that way, there were a group of Indian brokers which were quite powerful. So it was foreign institutions plus Indian brokers who were the big players. Mutual funds, not so much so, because they were just the Indian public was still getting used to the concept of mutual fund. So that was, I think it was only after 99, 2000 that slowly things started looking up, when the markets also started to rally because of the dot-com boom. Till then, domestic mutual funds were nowhere in the picture.
Right. So Santosh, if I were to ask, like, which era within the period of the 90s till today you think was the decisive time so as to shape Indian stock market, and why?
I would say that um, couple of things. In fact, two things which people say really changed. I wouldn't say an era. I would rather say the reforms. So clearly, I think DMAT was the biggest game changer. We got to see that only over a period of time, because in the early 90s, you could still trade in physical shares, and there were a lot of problems related to physical shares. You had to, again, after buying them from the broker, you had to send it to the company, then get it registered in your name. Then there was the worry about bad deliveries. Then SEBI slowly started making those rules compulsory. It said that if you can buy in any form, but when you're selling, you have to sell in DMAT only, which then meant that once any institution buys the stock, they made this rule for foreign institutions to begin with in a certain number of stocks. So once that happened, they then had to compulsorily dematerialize their shares. So that, I think, was a major uh, catalyst in the history of the Indian markets. The second, obviously, was the transition from open outcry to screen-based trading. Then the entry of foreign institutional investors, although it was allowed in 92, 92, 93, it was only uh, towards the late 90s that they really stepped up their activity in a big way. So these three, I think, were kind of key triggers for the market at that point, which really then saw increased participation even from retail investors, because retail investors had, after that big meltdown in uh, this IPO rally which was there, this IPO frenzy, didn't come back for a long time.
So
When it was
like,
toward,
yeah,
yeah, go on, Prince.
yeah, carry on. Your voice was breaking, so I was telling you. Yeah, go ahead, please.
No, so it was towards the 90s when the dot com boom started that once again you had retail investors coming to the market in a big way.
Right. Since you like the foreign institutions were dominant players during those times, so do you see like government was at ransom as far as the institutions were concerned? They were, I mean, broadly controlling the market, and which was the decisive, I mean, say on policy front, or maybe curtailing the dominance of the foreign institutions from government's point of view.
See, yeah, foreign funds were dominant in some ways, but I would say that again their activity was restricted to a handful of stocks, the top 50 odd stocks. And if you look at the retail investor psyche, uh, he will never try to go for all these well discovered names, the top blue chips and all. See, a lot of people made money in these MNC stocks when they came out with their IPOs, but after that, towards the 90s, I think clearly uh, the the idea was to, they had seen that how fast shares appreciate, lower price shares appreciate, especially mid caps and small caps. So that has always been one of the obsession with retail investors, go for those stocks which will multiply very fast. uh, so even back then I would say that institutions were active, but where was the uh, government at ransom? I think that was there till some time. I think almost till the financial crisis it was there, because they were still a dominant player in the market. At least till the financial crisis, clearly foreign institutional investors had the upper hand. They could dictate policy matters in many ways. That changed only after the domestic fund started getting big, which is over the last 5 or 6 years. That has changed only then. But I am not sure of instances where they actually held. I would say that they had a complete sway over policy to some extent, yes, but not really in a very big way. Because even in 2004, if you see, 2004 or 2005, there was a ban on P notes. There was a lot of hue and cry, but still, the government, even though foreign funds were a major source of foreign capital, I think the government stuck to its stand. Uh, and there was a ban on peanut, at least for a brief period, before it was reversed sometime in 2009. Yeah.
So I mean, recently in the budget, only like the government announced the P notes again. So how you read this? I mean, is it like some changes, or it's in the same I mean format, or maybe which it used to be earlier?
I think this one is for the gift city. Also, if you look at P notes overall, see, P notes had an advantage. I think earlier the beneficial owner could hide behind uh, a layer of firms, and it was hard for regulators to find the identity. So that was the biggest advantage of P notes. But that now scrutiny from regulators is getting stronger. So that is not really a big advantage, which is why I think the activity in P notes has reduced considerably. So back in 2005, 2006, P notes were almost 50% of foreign inflows into India. That number has come down considerably. I'm not sure what's the latest, but nobody tracks it as closely as they used to earlier. So this particular thing, I think it is given for the gift city, but will there be many takers? Well, one has to wait and see, because the anonymity factor which used to be there in P note some time back, that is a little that is not so much the case now.
All right. So guys, like if you have any questions to Santosh, feel free to send in a speaker request, or you can simply type in the comments. Naresh sir, if you have any question, you can also please unmute and ask in case you any.
Yeah, Santosh, I think we have spoken on DM before. My two questions, I'll make it very fast.
Hi,
One is,
hi, Naresh. Hi, sorry, I lost your voice cracked actually. Yes, we have been in touch. We have exchanged a few messages, and also
yeah,
thanks for the kind word.
yeah, that was like, see, anybody who, just like Prince, anybody who reads a book, they वो instant fan हो जाता है. That's a whole point here. So, two questions. One is, has anyone approached you to make a film on your book? Because this book is unlike any other book. So, has anyone approached you regarding the script or anything about this book? And next question is, as I asked you many times, when is your next book coming out?
Okay, I'll take the. So the first answer is that there was one approach, but I don't think it was making much sense financially, because that was one of the reasons I was not very keen on it, to give it away so cheap. Secondly, when is the second book coming? Okay, see, with the first book, what worked, which I tell people, is that many of the investors today, they have very little idea of what happened in the 90s and even the early 2000s. So there is no data on that as such. So when I wrote this book, it was like something very new for a lot of people who have just started investing in the market uh, in let's say mid of uh, the 2010s. But right now, much of the young crowd already knows what has been happening in the market. So if I'm writing a second book, then there has to be a strong storyline, because the first book had stuff which most people did not know. And now, because a lot of people have been in the market, most of the young investors, etc., much of what is there they already know. So my challenge here is to come up with a story that can talk about the contemporary events and yet make it very engaging. But it's something definitely on my mind, Naresh. I'm keen to do that.
Thank you.
Thanks.
So Santosh, let me do an advance booking on that. So if you come up with a second book, I take up, I mean, promise from you that you try your best to come to my forum and share your learnings about that book.
Definitely, I will.
Okay.
I will do that.
Great, great. So, Santosh, the era of speculation. I mean, the market was, I mean, predominantly, I mean, what we dominated by few people, and people were buying things in FOMO, especially the retail people. So, when you think the research in the equities has taken a proper shape, I mean, since its inception in the Indian market.
So research, yeah, I mean, research was quite dominant. I think by the late 90s, yeah, research was quite widespread. Most of the institutional broking houses, there were quite a few of them. So research was there. Now, if you ask how has it evolved, I would say that now, because there is so much force pressure on companies also to disclose everything. In fact, most of the reports look to be the same, at least as far as the top 100, top 50 or 75 companies are concerned. And then if you look at mid cap and small cap names, I think that is where, because not everybody tracks that, I think you might get some bit of something which is not so freely available. Otherwise, research was pretty good back then also. Uh, in fact, some of the first global reports used to be, I still recall, it used to be written in a peculiar style. and you would forget what the recommendation is sometimes, but the argument there was pretty good. The style, I would say, was very, very interesting. That is one report that uh, comes to mind immediately.
And as far as like retail participation is concerned, so it is driven by the bull phase of the market, or you see a big shift if specifically we ask in today's time, say last 1 or 2 years, maybe after COVID.
I think the fundamental nature of retail investors, which is to this I'm saying by and large majority. I wouldn't want to say that every single retail investor is like that, but by and large, the idea is to make a lot of money without trying to do any serious homework. That has always been the case. Uh, that doesn't really change. So after COVID, you saw people punting on stocks, and after once the stock price stabilizes or market starts to go down, most of them give up. I think there'll be very few from this round who will last, who will be around when we see a big bull run next time around. Because see, today there's a lot of sources of information available. Today, if you really want to do some good homework, at least it can't be due to dearth of resources. That is pretty much there. Disclosure levels are very tight. You have plenty of literature, you have plenty of interviews, all kinds of information, big investors sharing their thoughts, lot of forums, discussions. So if you really want to profit from the market, this is probably a very good time. But as I said, on the flip side, all the information is publicly known, which means that it's already reflecting in the prices also. So opportunities are that much harder to come by. But it is the same trend. When the market's rising, you see a lot of them come, and then when the market when the bull run ends, you see a lot of them go back. Most of them never to come back again. In mutual funds, although now we are seeing a slightly different trend. Whenever this is what fund managers have been saying, whenever market falls, you see them buying lump sum in a big way, and whenever market rises very sharply, they also book profits. So at least as far as the mutual fund investors are concerned, the retail investors, I think there's some bit of maturity there, because now they have seen that if you stay invested for 10-15 years, you definitely make decent returns, far above what you would have otherwise made by investing in FDs. So at least as far as the mutual funds are concerned, I think retail investors are slowly beginning to get their act together. For Jan also, if you see, it was like the inflows were pretty strong, and that's been the hallmark for almost the last couple of years. Now we'll still have to see, because markets operate in cycles. Now already 1 and 2 year returns in many funds have started to you know almost turn negative, or are they're very low, just about at fixed deposit rates. So if this trend persists for another year, then we'll have to see whether retail investors are still mature enough to continue with their SIPs or continue to invest in the market. I would say that it's still early days, although we are much better than what it used to be, let's say 10 years back.
Right, Santosh. So, Santosh, coming to, I mean, how you, the idea of writing a book came to your mind, and when did you start, and how had been the journey after you started, and by the time you published, and it got so much popular. I mean, how had been your overall experience with this?
Well, one of my ex-colleagues was approached by an agent, and since my ex-colleague was markets, he was, I think, working on another book at that time. So he referred my name. That is how I got to know this agent called Kanishka Gupta. Uh, so that is how it started. Then we pitched, and I think Macmillan was the keenest at that time. So that's how I signed up with Macmillan. It took me about 3 years to write the book. Very interesting journey. Very, very interesting journey. At that time, I was not really concerned about whether the book would do well or not do well. I just had a good time meeting up with people, and all the contacts that I had built since 97, going back to them, and some of them had become very good friends. So they in turn would refer me to somebody else. Uh, then I met a broker, I think Mr. Arvind Dalal. He was in his early 90s, but still very, very lucid. He had his wits about him. I got some bits of information. I think I used one or two of his quotes. That one quote which he said is still stays with me, and I often repeat it, that trees don't grow to heaven and roots don't grow to hell, which basically means that even when the market is rising, it doesn't mean that prices can go on, keep on rising indefinitely, and when they mean that they will just keep falling one way. So best part of that was meeting up people. I ended up meeting many people purely through reference. So that is what I tell my young colleagues in the newsroom, that develop relations with people, take the trouble of going out, meeting them in person. That always makes a big difference. So so many of my sources helped me with contacts, and I managed to get some really good insights which otherwise I would not have, had I just stuck to my same set of contacts and friends. uh, Having put that together, I was still not very sure in what form it had to go, because I was trying to write it in the form of almost a history, chapter by chapter. This happened during this period and this period, and then it just happened. I had about I think a month or so to submit it, month or two to submit it. I was really running behind the deadline. Then I met this character. It was a very interesting uh, incident. So he uh, he told me, why don't you come to my farmhouse and we will chat. So, and then he picked me up at Mulund, and then I went with him. We were traveling halfway, and he told me a few things. And that is that incident, where uh, this AS and PS, the two brokers whom uh, he managed to turn the tables on those two brokers. So that was that incident which he mentioned that, and then we didn't get to his farmhouse actually. In between, he got a call, and then he told that, look, sorry about this, but I have to leave, and we can keep this for another day. And I was very angry at that time, because he just had to get down in the middle of nowhere and then catch a train and come back all the way. That was a day wasted. But as I was waiting for the train at that Navi Mumbai station, I just tried to process all that he had said. And then the idea there struck me that this should be told through the eyes of a person who has been in that market. And because of that one particular incident, that AS and PS, which a lot of people still recollect, I think that is what gave me the idea to write it in a first person form. And after that, I rewrote the book completely. And even then, even after that, I never thought it would get such acceptance. So that's what happens when you don't expect anything. I've seen that happen with my stories as well. When you write something and you don't really expect anything out of it, a lot of people message you, comment, and all that. But when you write something expecting that a lot of people would notice it, usually that never happens. I've seen that quite a few times. So it was a big, I would say, a very big surprise. I just wanted to have a published book against my name, but the reception that it has got over the years, that's been very, very overwhelming.
That's quite interesting, I must say. So, Santosh, as far as like your, I mean, you have seen the market so closely, you have met a number of people, and so how that has, helped you develop your investing style, if any, if you would like to talk on that.
So this has been a bit of a disadvantage, when you're very close to the uh, kitchen, you actually see all those things which ideally you'd be better off not seeing, right? If you're eating the food directly and don't know what happens in the kitchen, then you would really be better off. You'll appreciate the taste. But if you've been inside there and seen how it's being cooked, So something like that, I would say, was the case with me as well. For for a long time, you would I was covering markets, and the older hands in the market would always say, "See, if you buy these blue chips, it will always come out good in the end." I never believed that. I occasionally did try in my younger days. Definitely, I tried investing. It never really worked out for some reason. So, direct investing has always been a lemon for me, and now there are other compliance issues also. But it's only of late that I've started investing in mutual funds, because I was skeptical of mutual funds also, because we, as a journalist, you get to know a lot of those shady practices that go on there. But if you focus too much on the negative aspects, then that becomes counterproductive. I learned that pretty late, but I'm trying to make amends for that now.
And like Santosh, like we have two kind of people in the market, especially a lobby which tries to be, I mean, low profile, and they are very good as far as their investments are concerned. Popular names. So, do you, I mean, find any names which you what we say admire as far as their investment thought process, or maybe framework, or the what we say, the contribution of them shaping our Indian stock market?
I would say many of them, and yeah, I've met quite a few low profile people also. So, as a journalist, what I try to do typically is that uh, I keep notes. So, whenever I meet people, I always keep extensive notes, and then I keep going back to that from time to time. So, you meet uh, all kinds of people. So, each one has a different approach, and I've noticed that one thing which makes them click is that they are true to what they do. So, they don't try to mix one thing or the other. So, if there are people, I've known people who go purely by fundamental always, and they have stuck to that. So there are periods when they don't really do well. So for instance, I'll tell you, between 2010 and 2013, uh, when markets were going through a really bad phase, many of those who had invested on fundamentals, they have lost a lot of money, but they still stuck with that. Their policy, because they'd been in the market for long enough, they knew that this tide will also turn. So there's been discipline there. Then there are traders who, some of them who only play on information, and they just play on information. So even when I speak to them now, they say the same thing. See, they don't really bother about the fundamentals of the company. So if they're playing by information, they're just playing by information. Likewise, those who are trading on technicals. So I've seen that most of the people who have a fixed approach and they stick to it consistently, I think that is where uh, eventually the big money is made. And it is this is where I think where retail investors mostly lack the patience, because they try out different things, and then when it doesn't work, they'll quickly give up. Whereas if you have to make serious money, and I'm sure there are quite a few retail investors who have made respectable returns over the years, but they've done it largely through discipline and sticking to one particular thing. So to your question, I would say that uh, there have been quite a few people. Now, very hard to say if they've really, in some ways, contributed or shaped the market, because I always maintain that market is too large to be shaped by one person. So each one brings his set of some kind of skill, some kind of new thought. But again, when you've studied them for 20 years, you also know that there will be phases when they look like gods, and there will be phases when they look like mere mortals. I mean, there's nobody who's managed to ride it all along completely. So now in 2022, you might say that a lot of them were right in their strategy. But if you were to look at back just till 4 years back in 2019, when the market was going nowhere, then those strategies were not really working. So in some ways, Prince, I would say that they are good. They are good professionals. They're good at what they do. But there are many factors that go into making somebody really, really hugely successful. So I wouldn't say that one person, any of them, they has in on his own managed to kind of been a very, very outsized impact on the market.
So, Santosh, like in your career of last, say, 30, 32 years, what is one or two big takeaways which you say, I mean, in the sense like that works in the market? So, what are your takeaways on that front, if you would like to?
I would say that, see, in many ways, the market is very democratic. I mean, if you have to look at from an investor's perspective, I would say that it's very democratic. Uh, and it's true what when investors say that, you need discipline over long periods of time, and you need to be patient, and you need to be willing to put in the efforts. One big thing which I see is that uh, people always ask for uh, retail people, they'll always ask for tips, and the theory is that, okay, if a big investor is putting a money in a particular stock, then they don't really have to think about it. But they forget one thing. See, that investor has also 10 other stocks in his portfolio. So you never know on which stock he's really over it. And even if assuming he loses money on one or two stocks, he still has the other eight stocks. If you're looking to follow him, you obviously have limited capital. How much money will you put on that one stock? How much are you willing to bet? So that is never a strategy that works. So I've seen, even in my relative circles, I've seen some people who have been investing for the last 20, 25 years, and they've made decent money just by sticking to very, very simple strategies. So that has been one of my takeaways. The impression is that market is for the person with a lot of information and a lot of money. I don't think so that is necessarily the case. Over a long period of time, if you're disciplined, willing to put in the hard work, I would say that this market offers plenty of opportunities, despite the fact, as I said, that all the information is now reflected in the prices. It's difficult. You don't get that outsized opportunities, but you definitely get enough opportunities to make returns better than what you would otherwise make from a bank FT. So that is, I would say, one of my biggest takeaway. The second is that this is from a journalist perspective. I would say that nothing can beat developing contacts and actually taking the trouble of going and meeting up with people in person. That is another takeaway. That is something I constantly try and do. Meet at least a couple of new people every week. And that is also one of the interesting, the good things that I like about my profession, that it allows you to meet a lot of people who are directly or indirectly part of the stock market. So there have been a lot of learnings from that as well.
Great, great. So we have few speakers with us. Santosh, you go first, and then we come to Anish. Santosh, you can quickly unmute and ask.
Yeah, thank you so much. And I have read the book of Santosh, which he has written. It was a very erudite writing. I think he also recently wrote a article about HFT and the derivative tradings and things like that. So now the topic is not about those things. What I want to ask is about the um, now the Adani thing. I know whether you can choose to answer it or not because you're editor of a channel. So, how do you see this coming out? Do you think the mojo will be back, or do you think it's gonna be there in the same zone where it is? There are two reasons why I'm asking you this. One is 90% is with the promoter, very less float around. So, is it possible to take it back to the area where it is? Do you think it is possible with your experience that you have seen in the market? That is it.
Okay, okay. Now, okay. See, I would like to put it like this. Now, will it regain their mojo? I would say one can only look at the odds, the probability. If history is any guide, stocks which rise to very, very high levels in a very short time, uh, they once it comes off, then it takes a long time for them to get back to those levels. So, case in point, for instance, if you look at the dot com boom in 2000, So take a stock like Wipro, for instance. Once it came off, it fell. It took almost 15 years to get back to where it was. Similarly, for most other stocks also, they took a very, very long time to come back. So when there are periods when stocks reach very unreasonable valuations and the charm wears off for whatever reason, I would say it takes a lot of time for them to get back to where they were, because second time around, investors will actually look for earnings, and they'll look for uh, they will be a little more focused on the fundamentals than the first time around, because many of them would have also lost money when share prices do come up very sharply. So they would be very circumspect. So then, unless the companies start delivering on numbers, it's very hard to get people excited back in the stock like we saw it a couple of years back. So I would say the odds of it coming back uh, seem less, because now people would really want for the earnings to catch up. They won't give those kind of crazy price to earning multiples the way they had given till some time back. I hope that answers your question.
Right, Santosh. So, Anish, you can unmute and
Hi Santosh.
Hi, Anish. First of all, apologies, because the last time you had invited me to spaces, I couldn't figure it out. So finally, this time I've been able to figure it out. It was the Twitter app update.
You don't need
So
spacing to. No worries. So it's good now that you figure it out. Next time you don't have an excuse to.
yeah,
Yeah. So I have one question for you. Do you you've seen the markets from the 90s now, and this has been a phenomenon perhaps globally also and in India also. Do you think the era of the star fund manager is sort of over now in India?
star fund managers, the era. See, whenever something has been written off, somehow that thing tends to come back. But I would say that probably the mutual fund houses themselves don't want, would be against the culture of a star fund manager. But that doesn't mean that you won't see any star fund managers coming up. Uh, because when a fund manager becomes very big, bigger than the institution, then it becomes a little problematic for them also, for whatever reason that fund manager were to go. So if you see most of the star fund managers, the really big names, the way it used to be, let's say back in the 90s, the not the 90s really, during the period from 2000 or to 2015, that is not the case. That's also partly because you have now quite a few mutual funds also, because back then the number of mutual funds who were really big were also small, which is why some fund managers managed to stand out. But if you ask me whether the era of star fund managers will be there, it should be there, but I don't think the mutual fund houses themselves would be very keen that one or two of their fund managers are kind of the face of the organization. So I think it would be more a problem of that rather than the ability of a person. So if that person manages to set up his own fund, then probably you've seen quite a few stars emerge there. I think the likelihood of that happening is much higher. You'll find it mostly in the PMS space, not so much so in the mutual fund space.
Yeah, I was just going to say that perhaps in the PMS space we'll or the AIFs where there is
Yeah,
much more freedom to express your style. Now in mutual funds there are so many constraints now that you cannot do you
exactly.
cannot be doing that. Thanks, Santosh.
And
so let me see the questions in the comments. One is Gajanan Ingale. He's asking, please say something about penny wise, pound foolish.
I think Pennywise, there are multiple examples of that. Pennywise pound foolish is uh, most common example that comes to mind is investors like to buy something which is low price for the simple reason that they can buy it in thousands or hundreds of shares, if not thousands. Whereas if you ask them to buy a good company, but the price of which is quoting in 5 digits, they will balk. But if you look at the performance of all these so-called high price, when I say high priced, I mean in absolute terms, you will find that they've all given very good returns. So if you were to put, let's say, the same 20,000 or 50,000 buying a handful of high price shares, you would have still doubled or trebled your money than if you had bought it in some low price stock, just because, not because of the fundamentals, you picked the stock because the price was very low. Chances are that you would have lost more money or not made the kind of money that you were expecting. So that is something which still comes strikes me, that when whenever there are these high price, so-called high price, again, high price in absolute terms, investors just don't want to look at them, and that I find it very, very surprising.
Santosh, I think we lost you. I cannot hear you.
Can you hear me now? Hello?
Yeah, yeah, right now I can.
Yeah.
Okay.
I,
So, yeah,
yeah, sorry. Yeah, please go on.
yeah, go ahead. I muted.
Yeah, this is the same thing I'm saying, that penny wise pound foolish. The thing that immediately comes to mind is that they they will go for low price stock. The second, which I've seen, many people say that, see, when a stock rises very sharply, very, very quickly, faster than what you had expected, many people will say, okay, I'll hold it on for one more year so that when I sell, I'll pay long term capital gains and not short term capital gains. Uh, or those kind of tax considerations. But often, sometimes when you hold it for very long, the returns are not the same as it was. So the stocks which rose very sharply in 6 months, let's say over 3 years, probably they didn't give you the same kind of return, or they didn't grow at that same rate. So just by trying to save on some a bit of tax here and there, you've actually given up much more. So that is the other example. So I've heard of many cases where during the dot-com boom, where people tried to save on taxes and they held on a little longer only to lose almost everything.
So the bull and bear cartel tussle which used to happen in those times, 90s or maybe during the early 2000. So do you think like same kind of similar things are happening these days also, or owing to proper regulations in place, these things have subsided over a period of time?
When I speak to those brokers back then, so-called bulls and bears, they would say that, there is nothing personal here. It is just that it's a. So bears would say that, look, it is not that I have anything personal against that, uh, uh, against the guy who is on the long side of the stock. It is just that I feel these shares are overvalued and I'm selling them. So it's not that I have any tussle with them. Uh, Still, if you see some of the battles there, the bull and bear cartel fights in the 90s, they would be kind of almost a fight to the finish. Uh, it used to get slightly nasty towards the end, and typically that's the way these battles end. So we're not seeing those kind of battles also because the market has become fairly big. Uh, and in the highly liquid stocks, it is very difficult uh, to be able to do that. Because see, back then there were other factors also. There was a 7 day settlement, and sometimes the bear cartel would influence some fund managers to sell the shares so that the prices come down. Likewise, the bull cartel would get somebody to buy the shares so that the prices go up. Some fund managers to uh, uh, influence them. Now, even for the FNO, the rules have changed. Earlier, they used to be compulsorily settled in cash. So we used to see a lot of fight in the derivatives in the future segment also back in 2008. But now there is the option, they can be settled in securities also. So even if you rig the prices, somebody with shares can still bring the prices down, or you won't be really able to corner someone. So there are multiple factors at play. The market has become much more deeper now. So I don't think one sees that kind of fights where uh, uh, you see very sharp volatility just because there are two people's fighting it out.
Right. So one question is around like all the incidents which are covered in the book. Are those, I mean, exactly the same, or there are certain limitations when we write and when we create something? So we, instead of the actual one, we take a similar incident. So is there any segregation on that front? One question is around that. If you would like
No,
to answer.
no. It's all mostly, almost everything. Whatever I've written there, I've not made up anything. It just happened. The way people narrated it to me, that is how I have put it there. But of course, there are limitations because you can't say certain things unless you can really back up, and you can't back up everything with facts. So, were you to say certain things, there is always a chance of somebody suing you. So there I've been careful not to mention names.
Right, fair enough. So, Naresh sir, Anish sir, any other questions or maybe any questions from the attendees in the comments? The relevant questions I have already taken with Santosh. So, Santosh, like if I were to ask one or two names, who are your investing idols? I mean, maybe in Indian context or maybe globally, anyone you admire the most?
Well, I wouldn't say I admire their investing style, because, as I said, everything goes in cycles. Certain cycles you're really on top, then all those even out. But I would say the DMart's owner, he's somebody who really stands out because he's among the few people who's been good at uh, both trading in a stock, investing, as well as running a successful business. I haven't seen anybody globally who has managed to do all three. So he's something I would say, uh, someone really uh, in a league by himself. Nobody comes anywhere close. You will have good businessmen, you will have good investors, but can you have somebody who's very good investor, trader, and also has managed to uh, create a really good business enterprise, and that too in one of the most competitive spaces? I think he's the only one, clearly.
Right. So, Santosh, like NSC came at an advantage to BSC. So, what do you think? I mean, where BSC lacked and missed out on the early advantage?
So there are many theories, Prince. So if you ask the BSc, they will give you one version. If you ask the NSC, they will give you another version. But I think broadly at that time, the public sentiment also was partly against BSc, and also I think that even the authorities really wanted to cut BSc to size because they had become very powerful, and see, a lot of these shady practices, they were encouraged, and because, like, say, simply, for instance, screen based trading, there was no reason why BSc could not have gone first with that. But the thing is, if you make it very transparent, then it becomes very hard to fool the people, which is what most brokers used to do back at that time. You would never get a fair rate. You started getting a fair rate only once NSE came into the picture. So many things, I would say that uh, BSE delayed it, and then by the time when they tried to make amends for it, I think quite a few things went against them. So yes, NSE had an advantage in some ways because BSE was not allowed to expand. But then BSE, some people in BSE have another version to it. They say, so NSE has another version. They say that, I forget now exactly what it is, but they say that BSE's contention that they were not allowed to expand outside Bombay is not exactly true. They had to give certain concessions which they were unwilling to give, and which is why this thing happened. So it is very hard to say. I think there are allegations and counter allegations on both sides, but at the end of the day, it was a good thing for the Indian market that you finally had some kind of competition. Though once again now we seem to be going back to the old, uh, the previous era, because NSE by far is the dominant player at this point in time.
Right. Though you have used cryptic names in the book, and that is totally understandable. But do you ever face any resistance on that front?
Resistance in the sense, sorry.
I mean, say if we are, I mean, indirectly referring to someone in a book. So on that front, if you would like to discuss, I mean.
Yeah, I mean, uh, yeah, you have to use names, I mean, nicknames, because as I said, you can't really back everything with solid proof. If you were to name someone, then that person can always contest it. See, a lot of things which I put in the book is also based on information from people I really trust. And some of them are also first hand information. But in many cases, I had to use the nicknames because it would be hard to back certain stuff that I had put in the book. So, which is why uh, I changed the names. But of course, the ones I'd written about, they would anyway know about it.
Right, great. So Santosh, like let's come to I mean what interesting topics you think are what shaping well and with a purview of say 3 to 5 years can do well.
Sorry,
If you So,
no,
which sectors or investable pockets do you see? I mean, if you have any opinion, you feel free to deny the question if you don't want to. So, any pockets you like can do well over a period of next 3 to 5 years, maybe.
I will skip that one, Prince, for the simple reason that I'm not really an expert when it comes to understanding stocks and sectors. Really, I have very limited understanding about them. Uh, so I wouldn't really be the right person there to answer this question, because as a journalist, what I do is usually I collect views from other people and then put it out. So I'm no expert in this particular field.
Yeah,
So you'll
fair
have
enough.
to
So,
forgive me for
yeah,
that.
no, no, totally understandable. So I mean, Santosh, like people who are aspiring for a career in your field, any suggestions for them how they can go about it and look for a career in this space?
Yeah. So journalism courses are pretty popular now, and because there are many journalism schools, the first level of filtering that most publishing houses do is that they look for somebody with a journalism degree. Back in my time, it was much easier, because even somebody without a journalism degree could easily make it. Today, it's a little tougher because there are so many people applying for jobs. Newsrooms will always want somebody who already has a degree. So in some ways, there's a bit of a barrier now, I would say, but uh, it is again fairly hard work like any other profession. Mainstream media has its set of challenges as well. The perception has also considerably changed. Uh, Business models are under attack, which is then gives rise to another set of problems. But I would say that to be a good reporter, uh, one need to have that persistent to constantly dig for stuff, should enjoy meeting people, uh, and be willing to be in there. In some ways, it is almost similar to investing, I would say, because when you meet people, it's not as if they'll give you some information right away. And if they give information right away, then you always need to be a little suspicious. So you develop contacts, and many of them pay off after a very long time. So one needs to be very patient. That is all I can say for somebody who wants to become a reporter.
Great, great. So, anything else you would like to tell Santosh, which perhaps I haven't asked you and you had in mind, or maybe
No, I think the questions were pretty comprehensive. I didn't think you would have so many questions. I think you asked them all.
so. Yeah, so thank you so much, Santosh. So have some water. I mean,
Yeah.
okay. And thank you so much, first of all, for agreeing to doing this spaces. And I mean, see, it's not like that you are our guest for today, and out of courtesy I am saying your book is good, but I literally I mean, from the bottom of my heart, thanking you for writing this masterpiece. And I would sincerely endorse the book for everyone who is new, I mean, who haven't come across this book yet. And this story like book, you will find so much engrossing, and you will also try to read it in one go. So thank you again, Santosh. And today's session was really, I mean, honest and thoughtful and insightful as well. And surely sometime down the line, to your convenience, will again have you over spaces. Any closing remarks from your end, Santosh?
No, this was my first spaces in that sense. It was a bit of a struggle. And thanks to you, Prince. Now I figured this thing out. And also, thank you so much for having me and all those kind words about the book. And that gives me sufficient motivation to write the next one. And also, I think it's quite a good thing that you're doing out here. I promise to keep track of the space little more closely and participate in many more of them as a listener, of course.
Yeah, great. And I would say, like, you yourself have raised our expectations as far as your second book in making is concerned, because you have set a great expectations by sharing this masterpiece with everyone around. So thank
That is
you so
always
much
that's
again,
always the point.
and thank you for your kind words. I just try to, I mean, as soon as I get to know about some person who can add value to our attendees, surely I try to catch up with that person and request earnestly so as to share their views. And since our spaces are educational and there is nothing of any marketing or any that sort of thing, so people are kind enough to agree to my request. So thank you once again, Santosh. And guys, like, if you are liking our spaces, you can show your gratitude by sharing your feedback. And you can also check out the handle of our guest, and you will surely find so much of market related news which are a good read, and you surely will benefit from those. So with this, I and thank you also, Naresh sir, for your great questions. And surely, if sometime down the line we have a movie around this, so we will appreciate and try to look forward to it. So thank you again, and
Yeah,
we get the motivation so as to bring more learned people to our forum. Thank you again, and please feel
thanks.
free to recommend a person who can come and share his or her learnings with us, and surely I will try to be in touch with that person. Thank you. Good night. Take care.
Thanks. Good night. Good night. Thanks. Thanks.